You ever wonder if there's a word that rhymes with orange? Well, today it's Donald Trump. So if you're wondering how his presidency is going to impact your investments in Canada moving forwards, stay tuned and watch this video.
What's going on, guys? It's Josh and Ehren back with my Finance Friday, and it is November 2024, and the Orange Man has made it back into the White House for another 4 years in power, and it is coming up quick. He is inaugurated, I believe, in January? Is when the inauguration is?
Yeah, I think like 50 days.
Yeah, 50 days. It is coming, and it's coming like a freight train. And one of the things about Trump is that he comes in with serious policy changes. And one of the things that most people wanted out of this election was reform and policy change. And they want to see some real change in their country. And because they are one of our closest allies and they are right on the border, odds are their policy changes are going to directly affect our policy changes and our housing market. So in this video, we want to dive a little bit into what possibly is going to happen when Trump takes office and how you can maybe be prepared for investing in Canada moving forward.
Yeah, I think the big two things here that we're looking at are monetary policy and trading policy. We all know that we're already in lockstep with the Fed, right? So our monetary policies basically mimic their economy and the decisions that they're making there. But also trade, like the U.S. is one of our largest trading partners for refined petroleum. And, we don't have enough time to talk about all the things that petroleum impacts in, food, groceries, gas, transportation, if anything, materials. Like the list is gigantic, right? So, in the latest news, once Trump got elected, starting to talk about some of the things that he was looking at. One of them does look to be potentially a 25% tariff on, us, their lovely neighbors, Canada. So obviously there is going to be some sort of impact there. Taking a look at like Canada's economy already, whether you want to believe we're in a recession or, not believe that we're in a recession, we're in recessionary areas as well, like already. And obviously having a 25% tariff slapped on top of us for, trading partners and goods, not going to really help our chances of immediately exiting out of that recession.
Yeah, I think there's a lot of people who are worried about what that looks like for the Canadian economy right now, because currently right now our economy is sputtering, to say the least. A lot of construction projects are moving forward. The debt either doesn't pencil or they're waiting to hold off on getting these projects off the ground. So one of the largest demographics of workforce in our country is not employed. The construction workforce for getting these projects off the ground is massive. And you start to think about all of the different demographics that are affected by this. It's not only the real estate agents and the mortgage agents or the banks. It's all the drywallers. It's all the people who are putting roofs on houses, there's all the HVAC people, it's all the people who sell that stuff, it's all the people who support and manufacture that stuff. It is a significant amount of Canadian GDP growth, and it's important to understand the ramifications of what that looks like moving forward. And if we take a look at a 25% increase in tariffs on Canada, what does that mean? It means that investment in our country isn't going to be appetizing, meaning money isn't going to flow. We're probably going to have more challenges economically in regards to getting cost of goods. A lot of lumber, if we have tariffs, then lumber and overall cost to create and build homes is going to be more. Labor forces, it's inflationary, so you're going to have the cost of goods. Most people are already seeing that the cost of trades at least are coming down, and what happens is when you have high cost of trades and you have a market that doesn't have work, obviously the cost of things start to come down and it starts to even out. Realistically, what's going to happen with our economy, I don't think it's overall good for real estate investment as a whole. What's happening right now is we're expected to see negative growth in our country over the next 2 years. And that was before Trump decided that he was going to add 25% tax. Negative growth essentially is population growth. And when people stop coming to our country, our GDP is directly impacted. And what that does is it softens a lot of things. It softens overall rent, which we're already seeing significantly in major urban areas, and it's rippling out into secondary markets. and it affects just capital moving in the economy as a whole. For multifamily investors, decrease in rent or softening in rent in a significant way can affect you if you have a project with projections of high rents moving forward, but also like pre-existing market rents. You're not going to get that lift in value anymore. So, I think it's going to directly impact Canadian economy as a whole.
Yeah, I mean, we already know that foreign, money's coming in and being invested into real estate, multifamily real estate, is a big piece of the puzzle that is getting the funding in, and there is a large amount of foreign money coming in to fund these projects. So obviously, when we start to reduce the immigration, as Trudeau is whether or not you're on that train or not, and whether or not there's pros and cons to that. Directly taking a look at real estate, there's definitely going to be an impact there. But even just going back to the tariffs, not only does it make things more expensive and increases your cost to build, it's also going to reduce just the free capital and the income available from the average Canadian to be able to buy these properties, right? We're already continuously, it's still being in a market where condo developments are way down, and we already know that condo developments are tied to the ability of the developers to be able to pass along the cost and actually get the pre-sales and the deposits put in. And when you have an economy that isn't supporting the growth in the home prices and the ability of the buyers to afford, you're going to lose that affordability there and just the lack of new condo development. So, as your gas prices increase, that means your everyday inflation is going to increase, your food, your necessities, all that stuff, which is going to reduce the capital in the Canadian pocket, which means they're not going to be able to put that money back into the market. So that's going to keep, in my opinion, probably keeping the condo market at the all-time low. Again, keeping on your point, like with the multifamily, I don't think multifamily overall, still a very stable asset. Yes, we're seeing already rent softening, and that's, being reported already. Part of the reason why CMHC put those changes to the MLI Select Lease Up is due to the softening of the rental markets. We've already seen that. So again, all we're really doing is just amplifying some of the issues that we're already having here, in Canada. You take a look at the bond market and the swap markets, you're up like 40 to 75 points in some of these markets, depending on which indications you're looking at, right? So, I mean, before Trump has even actually been inaugurated and got into office, as typical with the economy and the way economists work and investors work, they're predicting and forecasting things to come. And I think that initial movement is really telling you where everyone's head's at, because the guys with the money are making the moves. And when you see these things being talked about and you see these things happening in the lead up to the inauguration, that's just, again, that's that indication of what's kind of to come. And I think that's just kind of giving one a glimpse as to what is in all the economists' head.
Yeah, I mean, currently right now we have a record low dollar, the lowest dollar we've seen in a long time, at least in the foreseeable past that I can remember. I think that when you have, as Ehren said, policy decisions that are lockstep with the Fed, you have very tight monetary policy where like the markets move together, and I think you might see a divergence of that. You have the United States right now, who is honestly a powerhouse. Like their economy is growing quarter over quarter. People are talking about no landing whatsoever, and they're not going to have a recession, whereas our economy is sputtering on the point of collapse, depending on who you're talking to. I think you do see the Bank of Canada shift to larger interest rate cuts as the economy starts to kind of get deeper into this recessionary territory. And I don't think the United States follows suit. I think that they're going to continue to grow. And unfortunately, the Canadian dollar is going to become more weaker, and we're not going to be able to have the same purchasing power, and we're going to diverge a little bit from our counterparts down south. From an investment point of view, if you're looking at what to invest in right now, obviously, I would be looking at risk mitigation. You don't want to own the absolute highest end real estate, and you don't want to own the lowest end real estate. I think if you are diversifying your risk from having higher unemployment in a country, if you're expecting a major recession, then you're probably going to want to stay somewhere in the middle of the pack on multifamily real estate, something that's going to give you consistent returns in a good area, that you have tenant profile that is in a secure labor force market. You're not going to want something where you have $4,000 a month rents. You're going to want something that provides people who have jobs that aren't going to get fired. So if you're taking a look at where to invest, secondary markets get cut first. Keep in mind that if you're going to deploy capital right now, there's going to be good deals. And in markets like this that have pain and that are going through recessionary times, this is when assets change hands of people who are over leveraged to people who are under leveraged. And the people who have capital are either waiting on the sidelines or they're looking for really good deals right now. And the amount of multifamily deals that we're seeing with additional vacancies and VTB options and more flexible financing solutions, there is an ability right now to go in over the next, let's say, 2 years and make some moves in real estate if you are well situated to do so. I think that just doing it with diversifying your risk and buying in good areas and buying no-brainer deals is going to be something that people who have the capital are going to take advantage of.
Yeah, I think, from our opinion, this isn't a real estate is dead in Canada. There is a huge opportunity for real estate in Canada. When you take a look at Canada's real estate market on a whole compared to national averages, we're still some of the most expensive real estate in the world, which means there's, the value of real estate in terms of actually buying and then the appreciation and the actual value that real estate holds. There's still room to kind of play with there. And I think you take a look at the cycles and you understand how things work. We're still coming out of that COVID period. We're still in, essentially that trough. We're still kind of on the way up, right? We are on that next cycle there. So I think just, even take a look at the max exodus or, mass exodus, I guess, with quotations around of people that are leaving Canada from investing standpoint and getting to the States. Your competition is less too, right? There's a lot more people that were Canadian investors that are now just putting that money down to the States, which means there's a few less people that are now putting, offers in and bids in on their real estate in Canada. So I think, in conjunction with everything that we're talking about, there still is great opportunity in Canada from a real estate perspective, especially with the multifamily, like Josh said, picking smart assets, buying in good areas, right? Also, I think from Canada as a whole, there's opportunity here for really good decisions to be made, right? These tariffs aren't set. I think the chances I saw it was a 25%, right? So, it's not like we're sitting at 80-90% of these tariffs coming in. I think what Canada really needs is a leader who's patriotic and is here to put Canada first, right? Trump is really just doing what a patriot does. He's putting the U.S. first, right? Tariffs are how we're going to get America to be great again. Canada needs someone in office who's going to be able to come in and understand that you have a negotiator on the other side of the border. This guy wants to make deals. He wants to be able to find ways to make things work. The Keystone Pipeline is a huge opportunity, right? I think it was $2.5 billion a year of potential increase in Canada's GDP. You want to look at where to invest in real estate, well, follow that deal. If that pipeline comes in and gets approved, well, that makes Alberta an even hotter spot right now to be investing in, right? And just understanding that you're probably going to have an influx of workers moving out there for that gas and oil region, right? So following the trends, staying on top of things and understanding what policy decisions are going to impact, immigration and also just movement of Canadian citizens already. I think that's going to give you good indications of where to invest on these types of assets. And again, these things aren't set in stone. It's more so just things to take a look out for.
Yeah, I wanted to echo what Ehren said just in regards to following the opportunity. There has been a move, whether it's because of capital, a product, or foresight into policy decisions, but follow the money and follow essentially where policy is going to direct capital to flow. And right now, if you take a look at and you can project out a change in government, Alberta is set to be stimulated by the oil market, and everybody expects that to happen. So, a lot of our clients are moving out there and they're looking at multifamily deals, they're looking at development deals, anticipating that growth. Obviously not something that's guaranteed, but something that Canada does require and does need.
Yeah, I think, as the opportunity that COVID provided, where there was a lot of individuals that got burned, right? They got into real estate for the first time, or they were a mid-level investor and didn't have a full understanding of the market and how things move. I think this is presenting that same opportunity where you really have to start to kind of dig into the more intricacies of rates and economies and understand the relationship of Canada and the U.S. And that's not even getting into potential World War III with Russia and Ukraine and what that can do for everything else as well. But it's understanding how do rates, on a whole as a country get affected by economies in different countries. Now is another learning opportunity and another time to be able to figure it out and start understanding the trends and then figuring out how to get into things ahead of time and just taking advantage of that. So again, a lot of this stuff obviously sounds negative, and some of the stuff in a way, does have negative connotations and potential negative impacts to Canadians and our economy. But I think it also presents a good time to be able to really start digging in and really getting into like the nuance of being an investor, not just following, Instagram and YouTube trends, as much as we love you guys watching our videos, but, following it from more of like a macro, microeconomic level and really starting to dial in, because when you can figure that out in these time periods, that's just going to make you that much more resilient as an investor. And that's going to help you also make decisions that are going to last market cycles and not just get caught up in one and then get burned at the end.
Yeah, I think, investors are looking to invest in the future of their investment. They're looking for a return on the capital they're deploying. And if you can see the future, there's a handful of things you can do to see the future. And a lot of people aren't digging into the bond yield cycles. They're not digging into policy rate cycles. How does the Bank of Canada or federal government go through cycles, and what levers do they pull to be able to stabilize an economy? A lot of what you're seeing now is a man-made cycle. We printed money, we reacted by raising interest rates, inflation happened, we're turning interest rates down, and we're cutting interest rates. There are levers being played, and there are cycles that happen when this does happen. History repeats itself. So as Ehren was saying, we echo this, start to understand the actual bond yield cycles, understand policy rate decisions, understand how, when I don't want to say regimes change, but when you have a government change, how does that stimulate or affect certain areas of our country? I think there is a lot of opportunity coming up when the federal government is making some policy decisions right now and some changes with our immigration that are going to cause some investors who made the wrong decision quite a bit of pain, but are going to create opportunities for others. And I think that it's important to not focus on the negatives consistently around the news and the bears out there who are just doom and gloom. There is always an opportunity in the market, and I think that as investors we are resilient, and there will be a way to be able to find that opportunity, as investors have before and as investors will after. Just doing it in a way in which is financially prudent and do not over leverage yourself, and follow those trends.
Yeah, and I mean, if you want to boil it down, for those of you that are taking CMHC loans, a lot of you are in 10-year terms. If you're not trying to figure out what's going to happen in Canada over the next 10 years, and you're just investing short term, I mean, you should really have an understanding of what the cycles are and what things mean for 10 years, because you're probably going to be holding that property for at least 5 years if you're taking a 5-year term, but even on 10-year, you're going to be holding on to it for 10-year term. So you should be making these investments with long-term thinking in play and having an understanding of what's to come over the next few years.
Yeah, absolutely. No, I think I'm excited about to see what happens with the policy changes next year when the federal government changes, as well as what Trump is going to do in the States. I think that major reform is going to fundamentally shift a lot of capital, how it moves. They're doing massive tax reform, massive budget cutting federally, and that may echo into Canada. And if that does happen, I think we see positive changes. I love our country. I think it's a phenomenal place to grow, and I think our country is growing and in the right way. We speak to you guys every single week about how you can grow your personal investments, how you can grow your family's wealth. And this is going to be a place that's going to continue to grow. And we're excited to see it, and we're going to continue to find solutions in a market that is poised to grow. People call us all the time and say, well, how's the market? Expecting us to say, oh, it's bad. But our clients consistently find solutions to problems, and they're looking to make money from those solutions. And, when you have a market that is consistently focused on the world ending, there is somebody on the other side of that issue finding a solution for it. So we're excited to do that for you guys.
Yeah, and who knows, maybe our own government will have our own department of government efficiencies and our own Doge, and we'll be able to get that structured, and we won't have to worry about any poor rate policy decisions moving forward. So we can only hope.
If you guys like this video today, we really appreciate you hit the like button, hit the subscribe button. We usually don't get political, but we thought today would be a good video based off of what we're seeing today in the market. So if you guys did like this video, let us know. We'd really appreciate it, and we will see you next time.